94% put flow to 6% call flow just from last week if you filter for above 1 million in premium. So that's insane. That's even more than last week. And this is like almost a new high for amount of put flow that we've seen in a week for over 1 million. So just scrolling through some of these, we've seen a lot of these. Plus, a lot of them have also been above the ask as we've been seeing for the past few months so far. So a lot of bearish emphasis going forward. And also, if I scroll back up here, you can see that they did take some, at least these whales did take some after hours on Friday at 4:07, 4:05, and 4:05 right here PM. So you can trade SPY and the other like QQQ, other ETFs up to 15 minutes after the market closes, if you didn't know that, at least in options. But the expiration they chose was 11/18, which is different from the 10/21s we've been seeing lately. I do expect this to be the trend kind of going forward from here. We've seen a lot of these 10/21s throughout the week, as you can see, just scrolling through the expiration. And now that we're getting really near to that 10/21 date, I expect them to start buying some more time. So they will make this expiration the next big OPEX, which would be 11/18. So something to note at least there. But if we go over to the chart right here, you can see we did have, if you remember our last video, I expected this range around this key trend line, which, by the way, we did. I showed how to do this, but basically we connected at the bottom of the COVID low. This is a key pivot because it acts as a major low. Same thing applies to the other major lows we've seen in the past, like right here. This is a major low, so I connected it to the previous low of this year in June over here, and you can see that it converges up here. And I said within this range, whether it be a little bit below, right on the line, or a little bit above, is a key resistance or at least supply zone to watch out for because it can bring some more downside, and that's exactly what happened right here. We had a nice little push above 3,800 and then big sell-off after, was down 2.8% on the day on Friday. So it seems that we have been rejected, at least from this line above. So this is going to act as a key pivot trend line going forward, especially if bulls are able to get it above, let's say, in the future. That'd be very bullish going forward. But as of now, because we're below, this is very bearish. And it seems like the flow is also supporting that thesis because we've seen puts upon puts upon puts throughout this entire week. As you can see, just scrolling through here, been pretty insane. Like even earlier in the week, 13.7 million for this premium for the 355 strike. For this 11/18 order, that's some big premium, and these 10/21s as well. Seen a lot on those. Yeah, so really looks like the market is fairly bearish right now. We're going to see I'm assuming this week it will test near the lows that we made previously. It's going to be very key to see if we break below this, well, 3,600 definitely, but also below like the 3,580 level, which was the previous low that we made here, and is currently the low of year right now. Because if we close below that definitively, especially on the daily or at least 2 daily candles, that can bring a lot of downside going forward. Which just brings me to my next point here. I want to look at the Qs. I typically don't talk about tech too much, but tech has been very weak this year, even more weak than the S&P 500. And basically, this is just a simple like chart with simple technicals, not having a lot of lines and everything, just a channel that we've been trading within this entire year. We did have a little bit of a push up above, kind of like to squeeze out those final shorts above the line back here, but other than that, we went back below and it got rejected following. It was rejected twice on the way down so far, and continued down to where we are right now, which happens to be right about in the middle of this channel. So because we're in the middle of this channel, can technically go in either direction. We could go back up to retest the top, or it can do what it's done in the past where we touch the top, made it to the middle, and then continue down lower, which is right now we are in the middle. It could continue down lower to the bottom of this line, which would bring us very far down for this year. If we were to touch the line, let's say within the next month or so, that would bring us down to like around 230 or so, like around that level, which would be quite a ways away from where we are right now. This is just a basic channel to keep note of, especially as we see a lot of bearish emphasis, not only in the flow, saw some dark pool selling, potential selling at least from last week, and also just technicals. This is just a basic form of kind of where we are right now. Just give you kind of like a form of reference of where the market is at the moment. Also, another form of reference I like to use is the VIX. Again, I've talked about the VIX in many videos so far, and a lot of people don't like to use technical analysis on it. I personally believe it works very well. As you can see, this is a key resistance range up here, a key support level down here. It's worked like that, at least for the VIX, even though a lot of people think you can't chart volatility. But right now we are above this key blue line that I have right here. And as you can see, this pattern, we have the bottom support and top resistance. The more we stay above this resistance line, the more bullish for the VIX and more bearish for SPX. Continue to watch this line, especially this box I have right here. The more we stay above 30, the more bearish the market can get, because typically in the past, it's very difficult for the VIX to stay above 30. As you can see here, we typically go up to this like 35 to 38 range and it falls back, not able to stay above 30 that long. Right now, we've stayed above for quite a while, especially if this week we see continuation staying above. That's going to be very interesting with another weekly candle above this at least blue line. Even crazier if it could get above on the weekly for this box here, but continue to watch this because if volatility is able to stay above here and get comfortable, it can continue higher. And we see that next leg up, which would be a leg down for the market. Another thing with that I like to reference, as you guys know, is DXY. This is a very interesting setup right here because we had a big push off back here for like a big 3 or 4 day rally back in earlier, like September 20th. And then we fell right back down and retested the pattern that it was in before. You can see the bottom here was the support, top was the resistance of the pattern. And we retested it, but then fell back into it. However, this was a kind of a fake out in a sense. It's not the same as an individual ticker would fake you out because it's a currency, but the following day we had a green candle that closed back above the level. So this candle was neglected because the green candle closed back above this resistance level of the pattern we were in before. And because of that, we saw continuation for 3 days following. So the more, at least the longer that we stay above this pattern or the previous pattern that we were in before, the more bullish on the DXY. And we could at the very least see a double top formation around 114 to 114 mid. That would be at the very least. It could continue even higher if it wants to, which also will have a drag on the S&P 500, as we've spoken about in the past. So these are two variables, the VIX and DXY, that can kind of give you insight on potential weakness in the market. So continue to watch both of these and those levels that I've shown you in terms of technical analysis. A little bit harder to chart both of these, but still for the most part, you can see how this kind of worked out and how the levels were able to stay and be satisfied. So let's talk about Apple today as well. We have this channel, been talking about it for over a month at this point that we've been within. You can see the bottom here, support, top resistance, and we've just been falling this entire time during this channel. Whenever it hits the top resistance, falls down to the support and then goes back up. We actually didn't touch the top of it this past time. However, as of now, it looks like it's trying to retest the bottom portion of it yet again. This is going to be very crucial because if we have specifically 2 daily closes below this channel, that can lead to a lot more downside. Notice last time we had 1 daily close below, but then the following day basically meant this was a fake out and squeezed out a lot of the bears that added on this big down day because we closed below. This was a form of bear bait, which I reference a lot. In the future, if we close below, especially 2 days, that can lead to a lot more downside on Apple, and that means it could break below this channel, and that'd be a lot of weakness if it broke below this channel. We'd most likely see another retest of this yearly low if it did break below, which again, another convergence with the general market, not only NASDAQ, but also the S&P 500, because this is the highest weighting holding in both of those. So this will weigh on it as well. Continue to watch these levels. If we do have a break below, especially this week or next week, this is something that will weigh on the market a lot. So do be careful of it if we break below this level right here. Also, another key thing, if we look at IWM, we actually broke below this critical trend line that I've had for many months now. This goes to the top pivot, the high that we had all the way back in November when IWM made a high, and you drag it across right here. And right now we actually, last week, we had a few days that we were above this level during the week, but then we fell back below and closed right below the level, which is very critical because that means the weekly had a fake out above. And this is key because now we have 3 weekly candles that close below. This is a big kind of like tried to bounce back here. The buyers attempted to buy it up above this level, but it was not able to hold above, which means that's 3 major weeks of weakness, which it was not able to hold back above after it retested. And that typically means we're going to see some lows going forward from here. So do be careful, especially as we're right around that yearly low support level of like 163 roughly to 164. If that goes, this thing can start to keep going down a lot further from there. Something you definitely have to watch out for, especially when you have a candle formation like this for the last 3 weeks. This is a very bearish candle formation for the last 3 weeks. And also, along with that, flow has kind of supplemented this potential downside move on it. As you can see here, they've just been hammering the tape with millions upon millions of premium for IWM. Out of the money strikes, as you can see here, for these 1021 and 1118 expiration. So it looks like the whales are also very bearish on IWM, and no surprise at all because of the setup that we had right here. And again, this is also another major major ETF out there, so this is going to weigh in a sense on the general or the large ETFs like SPY and also QQQ. So continue to watch this along with the other stuff I gave you today. But other than that, I do appreciate you watching this video. It's going to be very, very interesting rest of this October month, especially if the yearly lows break on some of these ETFs, and that's going to be lead to a lot more volatility. So do be careful with it. Make sure you mitigate your risk. And other than that, I will see you guys in the next video.